everyone, hope you're doing well. Apologies for not having a timely Casual Friday uploaded. The Duck and I have been on slightly weird schedules that should be fixed by next week, including from Monday for Monday markets, Wednesday, and all that kind of stuff. But I thought I would upload anyway and cover the market briefly, but given not a ton has changed, do a quick kind of educational piece, especially at a time where altcoins aren't super interesting. I thought it might be helpful to kind of articulate our framework, boomer as it may be, as to how we look at these things. And I'm using the royal we. It's because, we share a lot of views, we disagree a lot as well. But in general, when it comes to altcoin market structure and, portfolio theory, if you will, we tend to agree on a lot of things. Worst case, I'm sure the Duck can completely disavow everything I've said, call me an idiot, and then we'll just nuke the channel. Anyway, first things first, be sure to subscribe to the channel if you haven't already. That really helps us. Also, like the video. And finally, download the FTX app. That helps us, and FTX has been great to us, so we'd be grateful for your support. Best mobile app to buy NFTs and altcoins for your friends and family before they go to zero and ruin your friendships to an irreparable degree. Now, I'll do the market bit very quickly, and then we'll get into the educational bit. The TLDR on the market is that not a ton has changed. So if I just quickly add my levels from my high time frame trading chart, you can see that this 38K really important high time frame level is still very much the inflection point in BTC USD, regardless of the continued, I'm going to use the term macro uncertainty, although it's far more serious than that, just as a kind of broad term to signal that stuff is still weird. So on a weekly closing basis, what you had was a very rough looking weekly close that respected the level. And then this wick that you see was the market selling off into the invasion news, and then the subsequent recovery at the time of recording this video. And you can see the weekly close is, a day or so away. So I think the TLDR version, at least on a weekly or high time frame basis, as long as 38K is intact, this level continues to act as support and prices accepted above it. I think that's decent at the very least for some sort of range-bound environment. If you consider kind of the structure of this setup, you essentially have very urgent panic selling into a key high time frame level that was defended, and there's a lot of positioning that was caught offside on that move as well. So in general, given that sellers really tried to push the market through a key high time frame level and weren't successful, as long as that level remains intact, you can have a short-term positive directional bias, but at the very least assume that because support did its job, you look for price to move generally towards the other side of the range. Now, I test, where would that be? For me, at least, the first trouble area, if the market continues to push higher, is around 42K. Hardly the neatest level, but it hasn't been a terribly neat market. So that's kind of the first level I've got my eye on. If you want to take a broader range perspective, I think if you just kind of look at the chart, the rather self-evident range high would be a retest of the 43, 44K mid-range. So that's kind of it. If you want to eyeball this thing even on intraday timeframes, you can kind of see what we're dealing with here. The market was sold very heavily on this news into or just below high time frame levels. It recovered and created this kind of shelf, if you will. You can kind of just eyeball this previous area of structure. I think as long as it stays above there, a push into, as mentioned, roughly 42K as the first level, and then maybe we get a mid-range retest at 44K would be reasonable. But if all this is some sort of short squeeze and the market, drifts back below 38K, that starts to suddenly look a lot less constructive. And I think at that point, the lows would be vulnerable. So the TLDR on BTC, structurally, the market's recovery is quite positive. In fact, you had a ton of panic selling that was bought up, and now it just needs to be accepted above the high time frame level that was reclaimed as a result of that failed breakdown. Right? Failed breakdown setups are only bullish if the reclaimed levels actually start to act as support once again, and you can start to carve out a premise that a lot of traders are and were trapped selling where they didn't want to sell, and then their pain is kind of further exacerbated, if you will, as the market continues to move away from that key, massively imbalanced area. So ideally, I'd like to see this get a bit of a move on. If it's going to be positive, the weekly close kind of looks like it's going to be constructive. But, I'm not going to put a whole lot of stock, not as much as usual, into the technical side, given I think it's still a kind of headline-driven market to a very large extent. But as far as technical goes, I think above 38.2, both on this red box, if you will, on a high time frame and intraday basis, that's pretty positive. If it starts to break market structure and make lower lows, especially on the daily time frame, we'll just kind of lose this shelf that is reclaimed, then I think the lows are vulnerable once again. I mean, just in terms of setup logic, right? If you have a key level of support, right? Let me see if I can click on this. Yeah, I can. So, you've got support, you get a bounce, and whenever the market comes back into it, if you get this really aggressive breakdown attempt that then gets reclaimed, the setup is only bullish if, and this may sound self-evident, if the reclaimed level continues to act as support, which would then act as evidence that the breakdown sellers were not successful, are therefore offside, and this is kind of a sign of strength in itself, that the market tried to poke lower, wasn't accepted, so you expect it to go higher. As a result, if you get this type of bullish-looking failed breakdown setup, and then the market just kind of drifts and loses the original level, which was reclaimed by the impulsive move, then it starts to look like a crock of shit, and that the bullish setup itself has not materialized, or alternatively, that all this was a short squeeze. Now the market's drifting back towards the lows, and that model is very much applicable to here, where you've got the high time frame level, the equivalent of this at 38.2k, very one-sided move through it that was the market was reaccepted back above that level, and therefore, if this setup is going to be technically bullish and continue to play out, shouldn't really see any closes back below 38.2 on a high time frame basis. And still, I think this is a decent environment to be conservative with targeting or just the size of rotations in general. First trouble area 41, potentially 44 on the cards as well. But it's all contingent on the market keeping the progress it has made, and that progress is the reclaim of 38.2. I don't love it at the moment, given it's just kind of stalled after spiking the highs, but on a high time frame basis, I still think, if you kind of just want to chill out and take a slightly zoomed out approach to slow moving higher time frame levels, 38.2 is the one to watch, and ideally it doesn't break market structure on the intraday basis, because then all of this starts to look like some sort of deviation, and that would be shit. I think I've repeated myself enough times there. TLDR 38.2k. Now, the title of the video, I'm pretty sure you could just pause it, screenshot this, and move on, but I will talk through some of these points. I want to touch on why Bitcoin matters, even for pure altcoin traders. And I've just split this up into a few sections. Maybe this will be an article in the future, maybe not. Do please leave a comment as to whether you want us to do shorter, one-off educational videos like these on the channel. If you do, we'll definitely do it, but I would love your feedback in the comments section, even if it's just as simple as typing yes. So I'd love to hear from you on this point. So first section is mostly about history. The market structure has changed a lot. So back in the day, which is really 2017, you were onboarded into crypto by buying BTC, right? That's how you get into crypto. Maybe you buy ETH, but primarily you'd be buying BTC. That's the kind of go-to coin, but also more importantly, you didn't have the ubiquity of, is that even a word? Ubiquity? I think so. Anyway, linear futures, these alt USD pairs that we're used to trading, were quite scarce compared to how the market looks right now. And most of the volume in altcoin trading was actually just in the spot market, and specifically trading altcoins against Bitcoins. So, the good old alt BTC pairs. And it was conventional wisdom, if you will, which is still pretty reasonable to this date, although slightly stretched, that essentially if you're trading altcoins, specifically the alt BTC pair, that you're doing so in order to accrue and accumulate more BTC, which makes sense, right? But now that's changed, and you've got fiat on ramps everywhere. You can join crypto just by buying stable coins. You can buy altcoins via fiat on-ramps directly, and you can basically bypass the Bitcoin onboarding process if you want to. Especially as the price has gone up, just the price of a single Bitcoin, it becomes psychologically, because of unit size bias, among other things, just a far less attractive way to get into the market. Like, take someone with just dabbling in crypto, maybe they've got just like a few hundred or a few thousand or even 10K, whatever, to punt crypto or to start their portfolio. They're not going to want to buy 0.0 something BTC or even 0. Whatever BTC if they can buy much more of that in ETH and Solana and, you know, XRP, whatever it may be, right? And just generally as a result of stablecoin proliferation, my English is really bad, throughout the space, paired with the increase in popularity in altcoin dollar linear futures or stablecoin margin, altcoin stablecoin margin futures, whatever you want to call them, that has meant that alt BTC pairs have kind of faded into irrelevance to a large extent, especially compared to the alt USD pairs. Now, that change in market structure doesn't mean that paying attention to Bitcoin is now irrelevant, right? As per the second section, paying attention to BTC still matters. And I think there are some good reasons for that. So the first would be that on a cyclical basis, right? So that in terms of market cycles and larger moves over like, you know, 1 to 3 years, whatever it may be, in general, it's still within crypto, at least a safe assumption that Bitcoin and ETH are going to survive from cycle to cycle, and also will make new all-time highs from cycle to cycle. So as a result, when the market is bullish, at least, traders will look to stack as much Bitcoin and ETH as they can, and they'll hold their collateral when the market is bullish in Bitcoin and ETH, because those are seen as the conservative coins, and they're kind of going up anyway if the market's bullish, so it's kind of where you park your money, right? Now, in a bull market, when Bitcoin and ETH are going up, as mentioned here in the third point, for traders, that's often seen as a benchmark to beat. So if we accept the premise that within crypto, excluding stablecoins, that Bitcoin and ETH are the, you know, lowest risk assets, if you will, and as a result, you generally expect lower returns from them as well. Although, you know, with ETH, you get exceptions, and BTC as well, yada, yada. In general, if Bitcoin and ETH is seen as the boomer safe coins in the crypto ecosystem, they become your the benchmark for your trading, right? Because if whatever altcoins you're holding don't outperform holding the quote-unquote lowest risk crypto assets, which as mentioned are Bitcoin and ETH, then whatever you're doing, the altcoin trading that you're partaking in, especially if you factor fees into it, you're essentially taking on more risk to underperform the market. So if you're moving in and out of these shit coins and slugging deltas and all that, and, you know, Bitcoin's up 10% for the month and your portfolio is only up 6%, or even if you're negative, then it obviously begs the question, well, why are you trying to trade? What are you doing with your altcoin trading in the first place if you're not beating the benchmark, if you will, or you know, at least keeping up with Bitcoin and ETH? So at the very least, even as a pure altcoin trader, looking at Bitcoin and or ETH returns still matters to give you an idea of whether what you're doing is worthwhile, as simple as that may sound, right? Now, more broadly, there are kind of market structure implications in general to Bitcoin and ETH doing well. As mentioned, the altcoin market does well when Bitcoin and ETH look healthy, and that term, I'm sure, is disputed to some extent. But healthy either just means trending up or consolidating and, yeah, moving sideways, or, you know, acting in a less volatile fashion within the general pretext of an uptrend. So think of it as a tailwind behind the market, whereby you've got a situation where the majors, as we call them, that is to say Bitcoin and ETH, are looking strong. Speculators feel comfortable taking more risk for higher returns, which essentially means moving down, if you will, the coin gecko list, or the coins by market cap, and looking for those lower market cap assets, which presumably will also have more upside potential as a product of their reduced market cap, right? So that's why bullish and or consolidating Bitcoin and ETH is good for altcoins. And also, it's indicative of healthy inflows and outflows in general for the space. Because again, Bitcoin and ETH market caps are pretty high at this point. If they're trending up and they've got a strong bid, it takes a lot of, you know, it takes pretty serious money to move those assets around and for them to trend. And therefore, if Bitcoin and ETH are doing well, you can kind of infer quite accurately that there's some big money in the crypto market, and then you can arrive at a secondary inference that at some point that money, or that pool of capital, or the hot ball of money, if you will, as per CMS lingo, will trickle down and seek more yield, seek more beta, or just seek greater returns, right? So when the market is bullish, there's a lot of dispersion and outperformance in altcoins versus Bitcoin, especially towards the end of last year. You know, Bitcoin was basically flat year to date, and then we had the Sol Luna AVAX trade and Axie and a ton of outliers which do well when the market is bullish. And that's really where a lot of participants get trapped, thinking that, well, altcoins do so much better than BTC. Why would I even care about that boomer coin that's, flat for the year or even up 60%, whereas my Sol, Luna, AVAX, Jewel, Phantom, yada yada, or even NFTs are up thousands of percent. And there is some truth to that, right? Like, to some extent, you're insulated even from Bitcoin performing poorly if you're up many, many, many multiples in everything else. But I think it still matters. And the reason is the following, or at least one of the reasons, which is that if Bitcoin is corrective, that it means big red candle, basically, especially in a volatile fashion, the correlations which are dispersed when the market is bullish become much tighter when the market is bearish and converge closer to one, right? And therefore altcoin positions get wrecked. So yes, you do see some decoupling and some relative strength, etc., but as the last few months have suggested, even the strongest coins are going to look paltry compared to their returns when Bitcoin looked decent, right? So it still matters, and especially the downside correlation matters when the market is volatile in that direction. Also, as a kind of tertiary point, there's not a ton of good evidence in my view, although some will quite reasonably disagree, that altcoins secularly, that means, on their own, if you will, trend up if Bitcoin and ETH look like shit. Even the strongest altcoins, if Bitcoin and ETH look like shit, will maybe just move sideways or hold their lows or kind of dump less through certain windows of time. Or maybe they'll bounce slightly harder when Bitcoin and ETH are green. But in general, we still haven't seen like a full decoupling, full dispersion in the market, which, a lot of people were expecting. Could still be the case, but at the time of recording this, at the very least, that case isn't terribly compelling, and that decoupling isn't as explicit and outright as I'm sure many were expecting. Or at the very least, if you want to be super conservative and pro-dispersion thesis, you still kind of have to concede that your altcoin positions are going to have a much better time in general if Bitcoin and ETH don't look bad, right? So in summary, where does all of this leave us? So I think looking at Bitcoin and ETH on average gives a good sense of risk appetite in the market. As mentioned, these are big coins, take a lot of money to move around, and they give a sense of safety if they look positive, look bullish, consolidating in a bullish manner, whatever, that the money that moved those high market cap assets is going to feel comfortable sticking its neck out further out on the risk curve and rotating or allocating towards lower market cap altcoins, right? If Bitcoin and ETH look good, that acts as a tailwind in the market, and as mentioned, that risk appetite trickles down and to alts and goes out further on the risk curve. If they look shit, especially if it's in a volatile fashion or like a sustained downtrend like we've had now, alts will generally follow and sometimes, quite regularly do far worse than the majors, especially if you're not holding like the best altcoins for that cycle or whatever's showing relative strength at the time. And in general, Bitcoin and ETH looking like shit will make for a worse environment for altcoins. I think at the very least, again, I'm happy to even make the most conservative case. Even if you're not trading Boomer and Boomer coins, which now I guess are Bitcoin and ETH, unless you're talking about stable coins, it helps to at least know that you're beating the market or outperforming the benchmark, and that your altcoin trading isn't a total waste of your time. Because again, imagine a world where Bitcoin and ETH are returning whatever, 10, 20% in a month, quarter, whatever it may be, and you're trading only altcoins that entire time, and you're doing worse than that, then it obviously begs the question, why are you taking more risk for fewer returns? And that question has no good answer. So that's it. That's kind of all I've got for this, again, quick installment of Casual Friday. TLDR BTC 38.2 weekly level, that has to, the squeeze that we've had above it has to be sustained for prices to look constructive. Otherwise, it's just a short squeeze that bleeds down that'll look like shit. So a bit of a line in the sand on a high time frame basis at 38.2, with 40 to 42-ish being the first level of resistance. And as for this whole altcoin idea, I hope it was helpful, and at least while alts are a bit quieter, you can kind of think of developing a framework for looking at them when maybe times are a bit easier. That's all I've got. Again, I'd love to hear your comments about this. If you'd like more short educational videos on this channel, normal content resumes on Monday, markets, Tuesday, newsletter, Wednesday, duck stream, then we'll for sure do a Casual Friday together next week as well. As always, thank you to FTX for supporting us. Leave a comment with your feedback, like the video, do all that stuff, and have an excellent weekend. I'll see you soon. Bye-bye.